Hey, Kevin.
Hey, Earl, my friend. Great to see you as always.
Absolutely. Happy Monday, my friend. I almost said Tuesday, but I'm rushing the week ahead already, right?
Absolutely. And who knows when whoever's watching us is going to watch us. So could even be happy Thursday.
Right. That's a very good fact. Very good fact.
Yeah, man. So another exciting week in real estate. Pretty exciting week around the country, especially weather-wise. What's been going on with the hurricanes and in Asheville. It's been absolutely heartbreaking. Our company, we're not huge, we're decent size. We've raised 20-some thousand dollars to help out in the hurricane ravaged areas, especially Western Virginia and North Carolina. We got Milton headed our way, at least through Florida. So it's been pretty wild. Unfortunately, in our area, Hampton Roads and Williamsburg, we've been pretty safe.
Yeah, it's definitely been totally devastating, for what's been happening along, Tennessee and North Carolina and West Virginia. I've had some friends and family that was affected, by that situation as well. And definitely hearts and prayers go out to those folks, especially in light of the new hurricane Milton, right? I think it's Milton.
Nope. Yeah.
It's kind of making its way, to the coast of Florida right now,
Yeah, that's right. Well, here back at home, real estate continues, buying and selling continues, and there seems to be a bit of good news that affordability is improving.
Absolutely. Yep. And that's one of the top things that we were talking about, prior to coming on air here, was just that how there's top three things that why affordability is improving for everyone. And that breaks down to mortgage rate, it breaks down to home prices and wages. You want to talk a little bit about the mortgage rates, Kevin, how they're trending down a little bit?
Yeah, absolutely. We've kind of talked on this on a lot of our chats here, but mortgage rates are coming down slowly but surely. It's a bumpy ride. It's not just straight down. Maybe a few weeks ago, we were looking at some pretty attractive rates, very low sixes. We were hopeful to start touching the upper fives, and that's for a conventional 30-year fixed. But then after the Fed dropped their interest rate, folks were like, woohoo, mortgage rates are going down. But it actually had the opposite effect. So we're on a little bit of a bump up. Not bad. We're probably upper sixes right now. That's as of October 7th today. But the trend is still continuing down. So hang tough, hang tight. Mortgage rates are bumping down, up and down, but in an overall downward trend. And we are expecting to see some nice rates in the fives, maybe into 2025. Not that you should wait, because when rates do come down, you have a lot more buyers and a lot more competition, and that's going to be the enemy of affordability.
Right, because that's going to create that competition that drives up those prices and overbidding and all the stuff that we've spoken about a dozen times or more. And some of the good stuff, we know rates aren't quite where people want them to be, in those low fives right now. But the reason that they kind of ticked back up is because the job market showed better health overall, which is better overall for our economy. As a whole, things are improving or, kind of trying to balance themselves out.
Where people want rates to be.
2%.
People were in the fours and they're like, ugh, I'm not buying. Rates are in the fours. I'm going to wait to go back in the twos and threes. Well, that was just fake money. That was government money being pumped in. The government is out of money, as we all know. So that's just not going to happen again.
Right. Interest rates at 2 to 3%, that's catastrophic events. Nobody wants that. You know what I mean? So if you have something that low, it's just not realistic, like you said. Yeah. Completely unrealistic.
Yeah, honestly, you're borrowing money from investors, people that have, tens of thousands, hundreds of $1,000s to invest. They're not going to let you use their money if they're not getting a return. So if mortgage rates were 2 and 3%, there's not going to be any money out there. No one's going to put their money out. They'll put it in the stock market. They'll put it in a government bond. They'll put it somewhere else.
Right. Because like I said, their objective is to make money. They can't make money at, those low rates. So, but but I'm not going to go too deep in the woods for them right now. But we'll move on to the second reason why affordability is, things are changing in the market, and that's what home prices are moderating. And the reason the home prices are moderating is because when we had those pandemic years, like we were just talking about, we had appreciation in double digits, where traditionally appreciation usually stays around anywhere between 3 to 6%, give or take. And with that home appreciation coming back down to normal levels, that means prices are rising a lot slower. We don't have a decline in prices. It just means you're not getting double-digit gains that you're seeing in abnormal pandemic years.
Yeah, absolutely. And then number 3, wages are rising faster than usual. So we may not all feel that personally. We may not feel that in our personal paychecks, but as a whole, wages are rising. Unemployment is going down. There is still a high demand for workers. So that's more money being pumped into the economy, and it's more money in people's pockets to help afford those mortgage payments.
Absolutely. Absolutely. And, like you said, with not just mortgage interest rates, but inflation interest rates coming down overall, people will start being able to see more of that residual in their pocket, as time moves along, and one of the things I always hark to was that, just because the interest rate is coming down for the Fed or inflation, that doesn't mean prices are going to necessarily drop. They're just going to go up a little bit slower. That's the big deal about it.
It's tough to ever see prices come down. We wish.
Yes.
It's just not getting as expensive as fast.
That is correct. That is absolutely correct, my friend. Well, Kevin, if they want to talk any interest rates or want to talk about affordability in more depth, how do they get in contact with a great lender?
You can catch me. I am at loanswithkevin.com, and there's my cell number, 757-645-8996. Call me, text me, hop on my website. Always available and happy to help.
Sounds good. And you can always reach me here. I'll put my finger here. It's 757-871-4167. That's my cell as well. You can reach me via call, text, or Pony Express. I just throw it out there. I don't know why. Hey, Kevin, always a pleasure, my friend. I look forward to getting with you on next Monday.
Sounds great.
Have a good one, buddy.
You too.